Mitch. Okay. All right, guys. So, welcome to today's class, Forex Foundation 101. We've been doing this for a couple of weeks now. This is the section 4 training. We've already gone far with so many things from the basics, and we're now entering into something very important, the advanced classes and advanced topics. So very soon, practically, to those that are just purely new, you'll get to understand some of these things, how we do this on a daily basis, trading. So tomorrow the market is opening tonight actually, and tomorrow we are starting trading again. So what we do is every weekend we take time to educate the new traders and even do advanced classes or attend to other traders' concerns. And every week from Monday to Friday, we make sure that we trade to make profit. So we trade and support the traders with analysis, forecast, signals, guidance, and support to be able to trade with. So as you can see, there have been updates about how you can process your funding accounts, get accounts funded at least with minimum of $20. That money is personal to you. So with that, whatever we practice, whatever signal we give, whatever trade we're taking, you take alongside with us. If you do that with us consistently, without going about taking different strategies and different trades and different risks applications, it is possible. I can guarantee you, it's very possible that at the end of the week, you should be able to make, even not maybe $1, $2, $3, $5, because your account is small. I don't expect you to leverage more. At least you should be able to make up to like maybe $10, $5. That is money. That is more relatable based on your account size. People in our community are making $100 every day. They're making $200, $600 on a single trade. The last Friday that we traded NFP, I personally made $600 on one portfolio. So I managed more than one portfolio, at least 3 portfolio, and all of that across the portfolio, money were made. And guess what? We didn't take much signals. The signals we dropped on Thursday was the same signals we traded on Friday, holding the position across the time frame. So this thing, there's a way to do it, and there's a way to do it successfully without getting yourself burnt out, getting your time wasted, and get your money burned out. So follow instruction in this community. We are here to guide you. We are not here to make you the community. Instead, we want to support the community. And we are coming with structures to support the community. So guys, that being said, I'm just trying to encourage you to keep on with the community activities. Keep on trading, keep on practicing. And I will tell you one thing. You cannot really make it out of poverty or out of the middle class without taking a crazy risk. And understand that the type of business you are in would either be able to put you in a position where you can become one of the top, wealthy persons in the world, or maybe if not really one of the top, but making very good advance, very good wealth, create very good wealth, become even stable in your income earnings. Because if you're doing some other businesses, to tell you that it's the lower risk businesses out there, but you cannot really earn that much because it's high risk, high benefit, high risk, high reward. That is it's been done everywhere. If you're not taking risks, most likely you're just going to be in the middle class. So the goal is we grow, deal with poverty, come out from the middle class, and also become one of the top people influential people in the society, and create wealth, and let other people also benefit. Generations to come to benefit from what we have, been able to put down. So that is the way we are going to. We may not be there yet, but that is where we are going to. So guys, thank you for that. Some other people are still joining us. So we are getting straight to the point today. So you've just joining us, stay on the call. Let's get to where what is today's business. So we stopped at vocabulary. We did some of the vocabulary last class. We did trends, we did uptrend, downtrend, we did pips, we did all of that. We did lot sizes. We did some of the market nature, like sideways market consolidation. I think we even did some little bit of price actions, how market evolves around it. So let's talk about market orders. So today let's talk about market orders. We'll start from there and enter into something else. So we have different types of market orders. And if you notice in our group, we usually send one market orders, not really one, but one market order is very popular, which is market execution. So we have market execution or instant market execution. Those ones you're going to see on your MT4, MT5, where you are just going to have to execute your trade or your order instantly. That's what it means. It doesn't mean anything more than that. It means you are executing your market or your order, or you're filing in your order at the market price. So whatever the market is selling at, buying at, that is the price you're executing at. That is the price your broker is going to file your order at. So let's say currently the price of Bitcoin is like maybe 110,000 or 105,000. That is the current price, and you're doing market execution. That means that you are actually executing instantly, immediately. Your exchange or your broker is going to file that your order that you want to buy or sell this market at the current price without hesitation, right? So we use market execution in a case whereby we are currently maybe analyzing the trade, or we are currently in our positions, we want to scale in positions. Then you can use that and just without wasting time. But we have another type of market types of order. So basically there are two, which is the market execution order, and the other one is the pending order. So pending order is classified into few orders, like 4 different types of pending orders. So you hear something like buy stop, sell limits, buy limit. So basically 4 types of pending orders. So one is market execution, instant markets, and the other one is pending orders. Pending orders is where we have the types like buy stop, sell limits, buy limit. So I'm going to explain how that's works. So just like its name it implies, pending orders, it means that your order are being pending for an execution. So you're sending your broker your orders and telling them, I'm going to buy Bitcoin when it is like $45,000, or when it is like maybe 120,000, I want to sell. So at this point, the market has not traded that price yet, but your broker has already filed your order pending the time that the price of the market or the asset is going to trade that price, and you've been executed. So every pending order has what we call a trade hold. A trade hold is just like either in your MT4, it's going to show you as a line or a price. So it's going to be either a price or a line that determines where you want to execute either a buy. We use the buy stop, the sell limit, and the buy limit order to execute this market based on our analysis. So we can decide to analyze the market, and we see that the market is not going to be good for us to buy at the market execution instantly. So we can wait and watch our charts and to execute that market when it finally gets to that point we want to trade, or we can use a pending order and just leave the market. So we set up pending orders, setting our parameters, stop loss, entry price, exit price, and then we wait for market, the broker to file the order once price traded there. So let's look at that more specifically. So stop orders, a trade hold has to cross only once before you enter into the trade. So basically, I've tried to explain that. Okay, guys, 1 minute. I think my screen has been disconnected. Just give me a minute, guys. Let me get to share my screen back. I think my screen just got, my internet just got me disconnected. Oh, fail when I go to personal hotspot marking. All right, sorry about that. My internet disconnected me. Um, here. All right, sorry about that. So I was saying, stop orders, a trade hold has to be crossed only once before you are entered into the trade. So if you set a price order, a limit order, a stop order, and then it does not cross, um, price does not trade and cross that level, you're not going to have your trade being executed. So your trade can be pending for 1 week, 2 months, 1 month, 1 year. If price does not trade that positions, it's not going to execute you. So the order is just going to be waiting for price to trade that level. So they are like a race. Once you cross a trade hold, you are entered into the market. So I've explained that. So let's look at this right now. So look at this. So typically sell stop orders. Let me explain what a sell stop orders is. So you place an order below the market price, expecting price to drop. When trade hold is crossed, you enter into the trade. So a sell trade or a sell stop, um, it goes in a direction of the market. Let's say you're expecting the market to sell, or the market is selling. You set a sell stop order in the direction of the market. Let me explain that again. So in this case of a market that is selling, like a downtrend, bearish trend, you understand this trend is selling. The market is going to be selling for a while. So you want to use a sell stop in a continuation of the current trend in the market. So look at this diagram here. Now, this has been an uptrend here, buying, and we expect a reversal here. You can see that the market broke a structure here, not literally broke a structure, but has refused to create a swing high here. Instead, it's creating a swing low, and that is a significant indication that the market might likely turn down. So if it turns down here, we expect the market to trade maybe this level, where we had a significant low, which is swing low and all of that. So what that is, we want to wait for confirmation that the market should first of all break a significant structure. Probably this other one that we're here, this one here. After creating this lower low instead of a swing high or a higher high. So we wanted to break this low and probably give us a confirmation here. So after breaking this low, we want to set our sell stop on the right here. What that means is that we are telling the market or the broker, if this market comes down and trade below this price, that is a confirmation for us that he has traded a significant level and a significant price for us. We want to sell this market because why? From the top here, he has shown us that the market is changing direction. It's going to go for a sell. So you trade a stop order in the direction of the trend or in the direction of the market, either one. So if it's the buy market, you're expecting a buy market or the market is currently bullish, you want to trade that direction, but you don't want to have an instant execution. Maybe you're waiting for 1 or 2 confirmations. So you want to use a sell stop or a buy stop to go in the direction of the trend. So that what means for a stop orders. Now, I think I explained that already. So like, look at this diagram 2, the second diagram. You can see from what we have from the diagram 1 here, price did not trade. This is the stop order where you're seeing the dotted line. So on your MT4, you see like a dotted line when you set that order, pending order. So now look at this. Now, until the price here, this is the current price, until here is crossed, both your bid and ask price crosses this, you're not going to be triggered into the market. You're not going to be entered into the trade. So, but look at this one. He has finally like crossed here. And what that means that you are now entered into the direction of the market. You're now entered into the direction of the market, which is the sell market, with the expectation that the market is coming down. So the same thing goes into the buy stop. The buy stop on a bullish market, where you're expecting that the market is going to continue in its bullishness, right? Now we set it in the direction of the market, generally for stop orders. So now we are expecting this market to go up. So look at this. This is a low, this is a high, this is a low, this is a equal high, and this created a higher low. So this low is higher than this other one, and that's the significant that price is still bullish. So what I mean is we want this price to take out these two equal high, and then give us a confirmation that it's still in a bullish nature, and then our pending order is going to be triggered into a buy order. So every stop order is going to be triggered, is going to go in the direction of the market. So that's what I want you to understand. So practically we'll see how to use that on your MT4 soon. So you can see from the first diagram here, now we finally have that price. Take out these two equals, and then did what? Continue in the direction. So now here is our confirmation that the market still stays bullish. In that manner, we are already entered into the direction of the market. I hope that should be very clear to us all. Okay, so the stop orders crosses and continue in the current direction of the market. So I've explained that. So limit orders. So limit orders work basically in the opposite direction. So people really get limit orders very confused, but it's very simple to understand how you use a limit orders. Because in some cases, when we send signal in our group, you will see us use a limit orders, and we'll give you a price. Okay, buy limits, sell limits. It's simple that we are waiting for that market to come to our entry or to come to our desired price at which we want to buy or sell. So those are the function of using pending orders, using sell stop, buy stop, sell limits, buy limits, and all of that. So now look at this. A limit order, a trade hold has to cross only before you are entered in the trade, with expectation that price will turn around. Remember, stop orders was in the direction of the market, in the continuation of the market, while limit orders is with the expectation of price is going to turn over, means in reversal of the market. So that's what you use limit orders for. So like a boomerage, price has to go one way before it goes the other way up, before down and before up. So let's say you're using a U-turn, you're riding in a one way, not one way, you're riding in a two lane or something like that, and you have to hit a U-turn before you can go back into your opposite direction. So that U-turn that you're having there is what we use as a limit order. So your interest is in the opposite direction, but you're already into one way. Like you have to make sure that you get to a U-turn and then you turn around and go the opposite direction. So you use a limit order, expecting price to drop more. In the case of a buy market, let's say, for example, let me use the case of a buy market. The market has been bullish for some days. Okay, let me use the case of Bitcoin currently. Bitcoin probably is trading at 107 or 104,000, around that range. And you know that it's in a bull run. Currently, we're expecting even more higher prices. But you know what? The price is too expensive, and we already had a very big bull run. So it may be a very unwise decision for you to say you want to buy Bitcoin at that price now to hold, even though there's still speculation that Bitcoin is going to go higher prices. But what you want to do, your direction, your bias, your expectation is higher price. You want the Bitcoin to go higher, but you don't want to buy at that price. So what happened is you're going to wait for it to come down to trade around $100,000 or $90,000. So if you trade at 90,000, you'll be comfortable to trade that price or to buy at that price. So you do that, you set a limit order at 90,000, right? So when you set a limit order at 90,000, your expectation is that your first bias is that price is going to continue higher. But the expectation that is you should sell to 90,000 so that you could buy at a cheaper price, and then you expect it now to do what? To go back to 100 and above so that you can make profit. So that's how that works. Look at this. Now, price is going, this is the sell limit. We want to set the sell limit. So let me explain this also. You set a sell limit on a bullish market while you set a buy limit on a bearish market. So take note of that. So now look at this. This is a sell limit. So what this means that this market is going up. It's going to be going up. So, but our sell limit is here. And our expectation is that when it gets to our sell limits, price should be able to do what's turn around. So what that means is in case of when we talk about strategy, all of that, we have a double top like this, or we have a liquidity structure like that, where we expect the market to take out liquidity. After a sweep of liquidity, it should reverse to sell side or turn a reversal or do a pullback. So what that means is we set our price up there, expecting this market to spike up and get into our desired price, and that's will be entered into sales limit order. So once the sell limit order is activated, it's going to turn into a sell order. Which means that our expectation is that the market buys up and then clear the highs and then turn around and sell off. So we use the sell limit order to be able to enter into that trade as fast as possible without a delay. So you place order above market price. So this is the current price where this arrow is. So above the market price will be above this arrow, right? So above the market price. You set your sell limit above the market price. Must climb higher before it's turn around and sells off. So this is the scenario here. So sell limits, like what we showed on the previous diagram here. You place your sell limit order here, and then the market keeps buying and triggers the sell limit order, and then it turns around to sell. So once you trigger the sell limit order, it's going to turn around to become a sell order. And in your analysis and expectation is that the market will turn around at that particular price. So you'll be able to enter into that trade immediately. So the same thing on the buy limit. So you set a buy limit on a bearish market or below the market price. So the market nature may not really come to play, whether it's bearish or bullish. But then it depends on where the current price is what makes you be able to set your buy limit or sell limit price with your expectation of a reversal of that price. So now look at this. So buy limit is set below a current price. So the market here has been like selling off and then it's coming down. What your expectation is, as price come down, it's going to hit either a support level or it's going to hit a liquidity or take some lows, most significant swing lows, and then it's going to turn around to go back to a bull direction. So this is simple. So once a buy limit order is being crossed, the next is you expect it to go upward. You're expecting a reversal. So you're now triggered and the price dips small, turn around, go back into upward direction. So take note on how you are able to set those buy limit, sell limit orders. So this is a very good example here. Where price comes and it doesn't hit your limit order, you see somebody say, that price has not hit my order. That price, rejected just very close to my order. So this is what happens. Until price crosses your threshold, where your price or your order is being placed, in case of limits or buy limit or sell stop or buy stop, until it crosses that threshold, you're not going to enter into that trade. So just like this is a sample here. Now, this one is active because price has crosses the threshold, so the trade is active. This one is not active because price does what? Get close to where the pending orders are, and then eventually they not cross. So you're not going to enter into the trade. What that means is that you have missed this entry. Probably your entry were not that precise. Yeah, nobody can actually get a precise entry. That's why even after setting your pending orders, you still have to monitor to see how the price action is forming, so that you can be able to know how to either instantly execute that price, or you still wait for price to come to you in either way. So this is just a simple understanding you should have. Buy stop, order place above price, and price keep going up. Sell stop, order place below price, and price keeps those ones going down. Buy limit, order place below price, and price then goes up, right? Sell limit, order place above price, and price then goes down. So one is used in continuation of the market or in continuation of the direction of the market, and the other one is used in reversal of the market. So take notes, guys. So price expiration, basically what this means is that with your MT4, MT5, you can set your timing for price. Let's say you set a pending order, because if you set a pending order and price never traded that place, that order can be pending forever. It can be pending until you manually close it or delete the order. But then you can also set expiration. Maybe that price you set on pending order for 2 days, 3 days, he has not triggered. Price maybe is continuing in its direction and all of that, and that order failed to be executed. So you can, set expiration time where that price can be automatically be deleted by your broker, so that in case of you're not looking at your MT4, MT5 for a long time, you don't surprisingly come back and say that trade has been executed and you don't know how, without knowing that you have a pending order that was pending without you being manually taking that out. So that's what we use price expiration to do. You will only be able to enter price on pending orders only. Market instant execution, you buy and sell price at the current. You can set expiration advisable. Every time else similar to market instant execution. So simple. Yeah, stop losses. So this is very important because we use stop losses a lot. In fact, in my trades, I give stop losses more than I give take profit. So in most cases, I use marginary take profit price. What I mean by marginary take profit price, it means that I'm currently monitoring that trade. Yes, I have a take profit level, in mind, but I want to watch the price actions to know that if that's going to be achievable. So that's what I mean marginary take profit price. And so in most cases, I use more of marginal take profit because there's no trade that I send out that I don't monitor, that I'm not even trading myself. So every trade I'm sending out, it means I'm 100% in that trade. So whatever I'm doing, I come back to community and update people. Okay, we are taking profits, we are closing, we are holding, and whatever stop loss hits and all of that. Yeah, so I also attach price for take profit, but in most cases, I use marginal take profit. So stop loss is very essential because without stop loss, man, you are in a very so let's say big shit, because your account can be wiped out without you one single mistake. So it's very good while you're setting your pending orders or you're taking your instant market execution, especially if you're using a high leverage. You set with your stop loss, right? Because if you don't do that before you close your eyes and open, maybe you were busy doing other stops and all that. Before you come back, oh, I did not set stop loss. When other people trade has hit stop loss and they lose maybe 1%, 2% of their accounts, your own is going to wipe you out because what? No stop loss level and with your high leverage. So stop loss, what it means is that it stops you out from unnecessary losses to exceeding what you were premeditated to risk for a particular trade. Because as a trader, you want to have a fixed monetary value or fixed pips or number of pips that you want to risk per trade that is affordable to you. That is a safety net for you, because if you don't use a stop loss, it means that you're trading your overall margin. Your margin is open. Whatever happens in the market can dip into your capital even more than what it should be, right? This market, we're trading with strategy. So our strategy basically tells us that this market or this order is either still valid or not valid. So we place a stop loss around where we feel that our initial decision of trading a certain market direction is wrong, or probably it's not going to be profitable. So we use stop loss to automatically take us out of the market. One, in the case of a volatile market. Two, in the case of where we are not monitoring our trades, and all of that. So when you put a stop loss order on your current trades or positions, your broker going to understand that you want to exit your trades in negative. Understand that. It's going to understand that you want to exit your trade in negative at this price. So that what stop loss does. So if you're new, you should take that to notes, right? So look at how stop loss work. In the case of an uptrend, you want to set your stop loss below your entry price. This time around, entry price. So in the case of an uptrend, you want to set your stop loss below an entry price. So look at this here. This chart right here now, this is like an uptrend example, and let's say the market came in here, create a low, you have a confirmation, you bought here at this price, expecting that this is gonna be the first impulsive leg, and this is gonna be a correction, and this is gonna be a continuation to the market side to buy. But then the market does its things, fell to create another higher high, and then create a lower high, come back, take out this low. You get, so the market's going against you literally because you bought around here and it's selling off. It's changing the character. So what that means, you're going to be in a loss. So for you to not lose more than what you should, or lose your entire account, depending on the risks you're applying, you use stop loss. And the basic way to use stop loss in elementary form is, recent low, recent swing high. But in advanced nature, we don't advise you use stop loss in those levels, because those levels are considered as liquidity in some advanced nature markets. So, but for basic knowledge, you basically want to look for a recent low on your entry price in the case of a buy market, or uptrend. Then you set your stop loss within that level. Then your what we call SL, stop loss. And then in the case of a sell trend, you look for a recent swing high and place your stop loss. So that's just the basic form to understand how to place stop loss. So in the case of a buy market, you set your stop loss below your entry price or current price. In the case of a sell market, you use your stop loss above your entry price or current market price. So let's get going. So practically, look at this. This is your chart. This is your price bar. Okay. So this market, we already talk about candlesticks, where we have different candlesticks can take a different color form. So in this case, this blue is bullish, this red are bearish. Okay. So this market is basically a sell market. So this is a sell market. Stop loss is set. This cell here, this dotted line here, is your entry price, which is around here. If you look at your right hand corner, and the stop loss is what is above the entry price. So now you give price a room to be able to do his things. It can come closer to your stop loss where you're in negative, and before you know it's out to your break even, where you're not in loss, you're not in profit, and then the market probably starts selling down, and then you make profit. So stop loss basically is to protect you from losses, where you're wrong in your market decisions. So this is the case of a buy market. So you have two things or three things. You have your stop loss, you have your entry price, you have your take profit. So you want to take your profit when you're selling the markets below price, when price sells off, and stop your loss out when price is going against you, and the other way around. So get going. In the case of a buy market, you can see in the other form, it's become an inverse of what the sell market is. So basically, this is your entry price, where you're expecting the market to go higher so that you can make profit, which is your take profit. And then in the case of where you want to stop out on your losses, your stop loss is going to be below your entry price in the case of a buy market. So take note of that. We move forward, guys. Same thing. So basically, like I said the other time, you can calculate your stop loss level either in monetary form or in pips form. So remember the other time we talked about pips, that pips is a unit of measurement in forex trading. So you use pips to measure how far price has gone. So pips has a very long way, a long function when we use to measure things, calculate things in the market. So you can calculate your stop loss level. If you're a professional trader, you can calculate your stop loss level and know how much you could lose beforehand, and also how much you could gain beforehand. So what that is, if you want to calculate your stop loss level, you basically need your entry price and you need your exit price, both as TP and SL. The stop loss price, this could be your entry price. Like here is 101, 101.11.44, and your exit price is 100.75. So you need this and this price to be able to calculate what is the distance between here and here in pips and in monetary value. So let's move forward. Your trading window. So far, we've done a lot. So we're about getting to trading window. So this is very important. On this trading window, we'll be talking about some platforms that you will use for trading. Even though we have given some of you the guidelines on what platform to download, what broker to register on, what accounts type you should create for now, demo or live accounts, MT4 or MT5, and all of that. So we are about getting into that spot where you understand the different trading platforms and why, the differences and all of that. So let's get in there if we still have enough time. So we have now till 9 o'clock. So trading window, let me briefly just talk about that so that we continue. So in trading window, we have different trading platforms. So your trading platform is different from your broker. So MT5, MT4, March Trader, what other trader? I guess C trader, match trader, C trader, even trading view. Yeah, trading view. Yeah, trading view. So about four, I've mentioned four right now: MT4, MT5, match trader, C trader, trading view. And even the brokers now create a traditional trading platform. Like Okta itself has its own trading platform. You see Okta platform as well. So this platform, you use them to execute trades. You use them to manage charts, basically. So you use them to manage charts, execute trade. Then your broker is where you now have your back end office. Like where you have your trading account, trading instrument, you make deposit, you make withdrawals. So when you create your live accounts, they provide you with your trading platform ID. So where you move your money from your broker wallet to your trading accounts, where you have either MT4, MT5, or maybe like in case of Okta, Okta trading platform, so that you have this ability to have a buy a buy order, sell orders, whatever instrument to trade it. And you have those devices in your phone to be able to execute your trade, basically, and do your technical and fundamental analysis. So we'll come back to this trading platform soon, but let's continue with one of these. So trading plan. Now, this is one of the vital things that is very, very important. Every single professional trader will tell you their trading plans. So what entails a trading plan? So trading plans will enable you to set a very good trading ideas, a very good trading instrument, a very good trading risk management in most cases. So let's look at what trading plans is really all about. So first, the idea, your plan, your action. How do you come up with your trade ideas? What do you look at on your trade ideas? What are your plan? What your plan could come in, like what are your time frame? What are your sessions you want to trade? Action, how are you going to execute those trades? Like the action here, what we talk about pending orders is part of the action. Do you want to use a pending order? Do you want to use a sell limits, buy limits? Do you want to use an instant market execution to be able to trade your plan? So basically, that is it. So what is your why? Why do you want to trade? This is a very very broad question. This is the essence of everything. The why is the essence of everything. Why are you starting trading? This question is something I would have asked you from the beginning. But why do we keep it to this point? Is because we want you to see what it's all about first, and now you can ask yourself, why do you want to become a day trader? Why do you want to trade? Because if you don't know why you want to trade, you won't be able to create a successful trading plan. You want to trade so that you become profitable. You want to trade so that you can make money. You want to trade so that you can build wealth. You want to trade because you want to build a business around trading. So what are your whys? You want to trade because you want to deal with poverty in your family, in your life, or have a secondary or a primary source of income. So that's going to give you a sense of purpose. That way, every of your commitment activities is going to align with your why. You'll be able to evaluate yourself. Are you really doing something that's going to bring forth your results, which is your expectation, like your why? If my aim in this business is to make money, am I following the right instruction that's going to, at the end of the day, I'll be able to make money? You get? So that's going to put you in a condition where you're able to create a trading plan and now be able to follow your trading plan. And your trading plan does not just about how to trade ideas, execution ideas. It's going to also come about how you want to grow your portfolio. Personally, I trade more than one portfolio at a time. And the worst case scenario is that I'm not even using automation. I trade them manually in some cases. So imagine in case of a volatile market, if I don't have a plan on how I want to take a trade, close a trade, manage the portfolio, then I'm going to eventually lose some money. But then I already have my plan out. This trade, I'm going to hold it. This trade, I'm going to close it before a New York session. This trade, I'm going to close it by tomorrow. So I already know how to manage my portfolio. So these are where mental works get in, that gives you a sense of reasons to why you're doing some certain things and how you should do some certain things rightly. So what types of trader are you? What kind of trader do you want to be? Do you want to be a day trader? Do you want to be a scalper? Do you want to be a swing trader? Do you want to be a position trader? So those are the different types of traders that we have in the industry. To explain this, a scalper simply trades a lower time frame. So you trade within 1 minute, 2 minutes, 5 minutes, 16 minutes, 15 minutes, 30 minutes time frame. So those are the time frame of a scalper. A very successful scalper is going to trade within those time frames. The highest he could go will be 1 hour time frame in its analysis and its execution. So for it to be that you are a scalper, it means that you're looking at lower time frame opportunities, and then you're executing trade based on that, taking your profit, have multiple entries, multiple positions, and then you trade and you make profit. So when you understand the kind of trader that you want to be, it's gonna help you know that, oh, this is what I'm doing. This is the right thing I'm doing. And you're not gonna feel left out. Let me use in the case of a swing trader. If you're a swing trader, understand that there are reasons why you choose to become any of this trader, for example. So if you're a swing trader, it could be that you have another job, right? It could be that you have another job and you just want to trade intraday. What I mean is that at least one position in a day that could trade within 1 day and 2 days, and then you're comfortable going away from that position when you have your parameters being set, like stop loss, take profit, and you do other things. Once in a while you put maybe your community alarm alerts so that if there's signals or notification you can receive, and you're comfortable doing that. So that puts you in a position where you feel not missing out. There's something we call FOMO, fear of missing out, because every trader in the market has that thing. When you feel that other people are making money, you're not making money, or when you feel that there are opportunities there in the market and you're supposed to be trading every single hour, every single minute, and then you feel being let out, without understanding your nature and the kind of trader that you are. So you feel left out. You always want to come back in the market, and you make wrong decisions because the market is full of noise. We use strategy to filter, all of this noise. So that is one. A position trader, a swing trader. I think I mentioned that a position trader, you just want to trade. You have a lot of capital, a lot of equity. You don't really care about the small time frame movement, the lower time frame movement. You're trading maybe 4 hours, 1 week trading positions. In some cases the market trend for like a week. Like this week, I think it's been trending for very long time. Just put your money there, put your position there, trade for the whole week. 1 position, 2 positions. You have a very high volume. At the end of the week, you can close in profit, close in break even, and you don't bother yourself. Look at your chart again and again. You could go look at something else. So understand the kind of trader you want to be. That's going to help you when you're practicing. But one advice we always tell people that when you're practicing now, you don't tell yourself, I'm a swing trader, I'm a position trader. You want to trade 1 trade in a month. When you're a beginner, you're just starting how to trade. When you're starting how to trade, you need time in the market to learn the different scenarios in the market. That is not the time you want to decide. So you have to experience some of these things, and then you decide which one resonates with you effectively, with the kind of person and the personality that you have. So do you prefer fundamentals or trading, or fundamental trading, or technical, or both? This also something that is very, very important, as a trader. Personally, I do away with some fundamentals because I don't really go into fundamentals that much. I trade more technical nature, and in my strategy, the technicals always go in line with whatever fundamental is coming in. So I'm comfortable trading the market direction of the technical that I'm seeing. So what fundamental is coming is just coming to bring in volatility to make sure that that market or that trade is in its direction, or price action perform. So I use a very few of fundamentals. Basically what I do in fundamental is currency strength. I compare the two currency in strength and economically, which one is bigger, which one is stronger at a particular time, and I use those. But then in some cases we trade the fundamental like the NFP, CPI, FOMC. Those are the major fundamental, which comes like once or twice every month. And the rest we filter that out with a technical analysis. So you have to understand. I know people that every single month, NFP, I have a professional trader, one coach, like I know is my friend. Every single month, he trades NFP and he will make money. It's more like a 95 or 99 point something % sure that you will make money from that price. No matter the risk you take, somehow you will make money from trading NFP if you're trading with him. And so confident in trading news, If you even trade technically, if you give you signal that is coming from technical analysis, but sometimes you may hit more stop loss than to take profit. But one is fundamental, it has an edge over it because it's really into the microeconomic and macroeconomic situation. So often they can analyze the news, the effects, so what they do is that the market will just come, create a volatility, maybe take liquidity high and lows, and then come back to technical analysis. That's how we trade. So during that time, he understands where the market direction is going to go in terms of fundamentals. And then once they reach the take profit, they're out because likely the market may reverse. And then they go back to technical analysis. So understand which one you're standing on, or if you're going to combine the both at some point in your trading. So pre-trading routines. This is still part of trading plan. All of these things I'm talking about is still incorporated in your trading plan. So pre-trading routine, what are the things you're going to do before you trade? It could be a daily routine. It could be prayer. It could be a workout. It could be reading. It could be something that could get your mind strengthened. It could be maybe you want to take your special meal. What are your routines? You want to exercise yourself before you trade. That one is to help your mind, mental state before you trade, or you want to talk to somebody before you trade. That is one. Then the other hands is what are your own personal trading routine? What do you look at before you start trading? Do you want to look at the fundamental? Do you have news today? In some cases, I have to check my news portal. What news do we have today? Because I do not want news to come and take me unaware when I'm already in a position. So I want to know, do I want to wait before the news or after the news to take my trade? So that means my routine is I need to check for the fundamental of that day. So if there's no fundamental of that day, or if there is anyone that I don't understand what's going to be the impact in the market, then I can, roll that position out or give that position a time where I really want to trade that. So understand what you need to do before you start trading. Do you want to, look at maybe some other platform or other communities, or you look at your analysis from your mentor or maybe that was posted and all of that, because this is the market. We have resources all around. You get? So what trading sessions as well? Trading session matters. When we talk about trading session the other time, I think I took time to explain how effective a session could affect your trading and your trading decisions, both with your trading pace, your trading time, where you have volatility, low volatility, and liquidity and low liquidity, and all of that. So fast forward, what specific time do you trade? I think we'll talk about this before. Let me just say this. We lovely want to trade during an overlap session. What is an overlap session in the market? Overlap session in the market is basically where two markets are trading at the same time. And basically usually be New York and London sessions, because you want to trade where the volatility is. Sometimes we have early entries or early market setups and all of that, but where the markets really, in fact, my eye is always on New York and London sessions. So I can have a position, I may not really look at that positions during maybe the morning Tokyo and all of that kind of morning sessions, but I'm so sure that once this is afternoon in Nigerian time, I must look at the market, because I'm sure that is when volatility is going to come in. So New York, London sessions is a prime time for me, right? So you understand that in your own cases. And again, before entering a trade, what is your criteria? I think I cannot handle trading criteria today because it's a lot. If we go by talking about trading criteria basically is going to form our trading plan. And apart from forming trading plan, not trading plan, it's going to form strategy. This alone, it's what makes up your strategy, trading criteria. So ask yourself, as a trader, what are your criteria for trading? What do you look out for in the market before you trade? Do you look at support and resistance? Do you look at liquidity points? Do you look at pullbacks? Do you look at reversal points? Or do you look at continuation in the market? So your trading criteria is going to form your trading strategy. Because when you have a trading criteria, you have what we call a checklist. A checklist is you have a bunch of trading confluences. You have a trend line, you have a moving average, you have support and resistance, you have a price pattern. All of these are on your checklist, how you use them. So you want to confirm, is my price at my support and resistance? Yes, price is at support. you tick. As price taking liquidity, yes. Sweep of liquidity, you tick. As it's giving you a pullback or rejection, okay, there's pullback and rejection, you tick. As it's giving a fake out, yeah, there's a fake out, you tick. You know, so what is there a volume as market kicking the volume in the direction that you want to trade, you tick. So those form a strategy for you, set of rules. And when you have that in place, it's become easy for you to look at a market that is noisy for you, or the market you don't have enough, because what you don't understand, you cannot really trade. And once these are not in place, you just leave it there. But criteria is going to form a trading strategy. So understand your trading criteria, guys. Learn how to build a criteria for your trading. You will start small. You understand this. And that reminds me, I might give you some of you guys some of ebooks that you might have to study that will give you some of the breakdowns of price actions. In your own time, you can do that study, because here in Forex, we learn. There's no ending to learning. Just know that you sign up, you learn until you become perfect, or you maybe not become perfect, or you become profitable, guys. So then one more thing, your criteria does not have to be long. So when you have like a 10, maybe 5, 6, 7 trading criteria that form your checklist, you just need to at least 5 of that should be met up. If 5 of that criteria is met up, then you can have a go ahead to execute any trade. How many pips do you want to do you want minimum out of each trade? So that's one thing I said the other time. I think I talked to some of my students or some people that under mentorship before. I told them, you need to have a monetary value. How much do you want to make per trade? Have that in mind. Personally, let me tell you what I do. I'm a scalper to some extent. And the trades that I'm doing scalping, I don't send those signals because they are high frequency. I trade those ones in managing portfolio, maybe asset management or trade or copy trading, where I know that I don't have to talk to anybody to execute that trade or manage those portfolio. So I fully concentrate. So what I do is that if I'm scalping, I'm usually taking my profit within 10 pips. From my entries, 10 pips, 20 pips, I'm taking profit. And I'm going to scalp in the direction of the market. After 10 pips, 20 pips, I take a profit. I will wait for a retracement. Once it gives me a significant retracement in the same direction of the market, in the same confirmation, I take another trade. 10 pips, 20 pips, I'm out. I understand the levels where price is going to bounce, pull back, and all of that. So that 10 pips, 20 pips, that is in forms of pips. In maybe in lot sizes, I already know what it's going to give me in lot size in monetary value. So if I'm trading 0.1, 0. That's 1 micro lot, $10, I'm out. If I have $20, that's a big one. So whether it has more potential and all of that, once it's $10, above $10 and below $10, like $9 on that level, I'm satisfied for that trade. I take it off. And I probably have to wait for like maybe 30 minutes or so. If I miss on, if I take my profit out and then the trade keeps going in my direction, I don't feel bad. I don't feel, can I jump in again? Because that's going to be a trap for me. Rather, I'll just close that and leave, or come back and wait for a reversal. So you need to have a monetary value, how much you want to risk, how much you want to make, and how much you want to, where you feel uncomfortable in terms of negative. If I'm trading, let me say if I'm trading a $1,000 account, if my trades gets into $100 negative, I'm telling you as a sample, if my trade gets into $100 negative, my eyes are open to know why that trade is so bad that I'm risking $100, because that's like 10%. So $100 start making me uncomfortable. If I'm floating $50, $60, I'm okay. But once you get to like $100 above on a single trade, on a $1,000 account, it makes me very uncomfortable. So I want to make sure that I don't get to that place where I'm so uncomfortable for a particular trade to take losses. So these are the things that you work on yourself and on your strategy. How many pips do you want to average a week eventually? So let me say, for example, as well, if I trade $1,000 accounts on a low performance, these are personal accounts, because I don't even do that on management accounts under management. Personal accounts, I expect to make at least $250 for that week, every week. The worst case scenario, I should be able to make $250. So that's like $50 a week or a day for me. So $1,000, $50 a day, I'm good. $50 a day, and I know how to get that $50. In some days I might do $70, some days I might do $40, $35. So the complements between the days I make more and the days that I make less. And eventually I'm targeting 200 to 50 in a day. That is personally for me, you know. So I could do that very comfortable. But then if it's an account under management, I do lesser because I don't want risk exposure on account under management. So I do lesser than that. So I could do like maybe $100 in case of a $1,000. If I do $100, I'm okay. Wait for the next week. So this is going to help you stabilize yourself, you know, and know that you're doing something and you're making progress. So what percent of your accounts are you willing to risk? All of that's, you know, still part of your trading plans put together. What percentage of accounts are you willing to take risks on a day, weekly? I think I've had all of this to say. How will you manage your trade once you get in? Very vital, important thing. How would you going to manage your trade when you get in? So let me set an example. If you notice, each of the trade that we send is always a take profit. Basically, there's always a stop loss. How do I want to manage that? I wait till my trade either hit my stop loss or I found a confirmation of a reversal earlier. If I find the confirmation of a reversal earlier enough, then I see that it's all clear that the market is going to go against me. Then I can, you know, close that trade early. But otherwise, I would likely want to stay in that trade, even if it's 1 day, 2 days, 3 days, as long as it has not get into my stop loss. I don't bother about it. Then when it crosses my entry and it's in profit, then I get to watch for the levels, you know. Then I start creating a new plan. This trade has gone this far. Do I want to take profit? Do I want to break even? Or do I want to, you know, average the trade, maybe take second entry and write down the trade? So these are the things you want to think of when you're making trading plans as well. So what is your exit strategy? The same thing as well. You want to know how you want to take your profit out of the table. Okay. So how much trading will you do a day, a month? Like last week, I think we took only 3 trades, if case not taken. In fact, it was because of the new people that were not trading that week that made me even give the last trade for that week, which was AUD USD, which we are still going to hold as the market opens for next week because that trade is still valid for me. AUD is still very valid to sell off for this week. It was the only trade that was not in profit. It was only around the break even, but the rest, Europe USD, I think GBP USD, and GBP USD that was given was in profit. So basically, we took about 4 trades or 5. So you don't want to trade again and again and again. So you understand the number of trades. You can wait. Patience is something that is a vital key player when you're a trader. So describe your trade ideal or your ideal trade setup. And okay, so we might have to stop somewhere around here. We'll talk about describing your ideal. And let me see. Hold on, let me see. If we could finish on this today, it will still make sense though. I want to be sure that. Okay, I don't think we can finish this today. So we're going to stop somewhere around here. Where is that? So that we continue. There's still very important things we need to talk about as we continue. So our time is already up. We've been 1 hour already. So we'll stop at what days, weeks, season will you not trade. So this has to do with trading holidays. Yeah, there's some holidays that happens, but then you still have your market is open, or weekends you have BTC trading on weekends, indices are still trading on weekends and weekends. In indices too, synthetic indices still trades on weekends. So you want to know, is there sessions? Is there a time you don't want to trade? Is there a week? Like this week, I want to trade far less this week. The reason I want to trade very less this week is because last week I did over 13%. Last week I did 30% in one of my trading portfolio, and some other trading portfolio I think we already done like 40% or not 20-something percent already. So for me, my minimum target for a month is 10%. So I've already averaged on my minimum target. So what that means is I take more time to look at more trades, more high probable trades to take and lower risks, so that I can have my monthly goal target met correctly without over trading and doing all sorts of things and all of that. So my weekly this week, I already projected this week that I want to have a laser trade week, but quality trades. So it could be 1 or 2 trades, 3 trades when we have the best opportunity, or use that time to do something very, very vital for the community. So this is how trading works. When we say trading, it's like a business. It's not just signal entry exit. Some of us are doing it very professional, and that is where I want everybody to get into. So get your pen and get your paper, start putting these things down. Have a structure for yourself to manage yourself, because at the end of the day, this is put in place for you to be able to manage yourself as a trader, so that your strategy can work. You can have a fantastic trading strategy. As we are coming to strategy, I'm going to show you guys one of the simplest trading strategy you can start with as a beginner. I trade about 3 strategy. So I trade the strategy, the smart money concept, which is the ICT strategy, the Falcons trading strategy, and I trade the price action strategy. Under price action strategy, I trade the simple moving average strategy alongside. So yeah, there are elements that are very similar. Like in all of this strategy, you're still going to find support and resistance. You're still going to find liquidity. You're still going to find higher highs, higher lows, lows and highs, and all of that. But there are little things you have to understand. Imbalance, all of those price actions put together, to be able to trade alongside with. So, but then, before you can even know if your strategy is working or not, because I tell people every strategy works. How do you know that every strategy works? Because if you use a strategy, if you're trading a strategy, maybe a smart money concept, based on your understanding, and then you're constantly in loss, that simply means that that strategy is working, but it's working at opposite side. So your losses could have been a profit if you understand how to define or redefine that strategy. So what means is that if you were trading the opposite side of that strategy, that could have been profit for you. So every strategy works. So it's for you to know which side are you on. How are you always arriving at losses? If you're arriving at losses consistently, go and learn why the losses, so that you can turn the losses into profit. Probably you need to trade the opposite side. Do you get? So it works, but the edge comes when you master the basics. I tell people you don't need much. Master the basics and stay on that. So guys, when we have our class again next weekend, we're still going to continue. Don't see, so because we're not showing you charts and doing all of that stuff doesn't mean that we're not doing something. These are the things we do. We do more layers of charts sometimes, and we do this more because it has to do with your psychology, your structure, your personality put together. You are the CEO of yourself. When you take a trade, I'm not there to tell you don't take this trade. In fact, in most cases, I tell some of my teammates that look, the hardest person to advise is a beginner, somebody that just started to trade forex and is probably seeing money. Is the hardest person you can advise on earth. When you tell that person don't take that trade, and then probably it doesn't take the trade the first time, and that trade eventually played out and make that person money. And the second one, it told you, should I take this trade? What do you think about it? And you said, that trade, I'm not sure that trade is going to work. Don't take that trade, or don't take that risk. And he took that risk and he make money. The third time, he's not going to tell you that he's going to take that trade. He's not going to come back to you and share that trade again with you, because if you feel like it knows better than you, why do you always tell me not to trade? But eventually it's working. Or let's say the second time he did not take the trade, but the trade went in his direction. He will assume he has been right a couple of times. So the next time it's going to be very difficult for you to convince that person not to take that action. But we understand this thing because we understand how the market works. So that's why we said in forex trading, you are the boss of your own. You take responsibility for each of the actions you've taken, and sometimes we only give you a professional advice, and then you make your judgment and all of that. But you have to know enough to be able to judge rightly and make your decision rightly. So guys, that being said, we still have a lot to cover up. We'll do this probably before this quarter end. We'll do more of advanced training strategy, a lot more. as we progress. So we want to have these new people that have joined our community to have this insight of what we do. So I can see that a lot of people have joined us today, and basically most of them are new. I've seen you being sent. I've seen Jeff Carter. Okay, Jeff Carter is not new. Jeff Carter has always been here on this class. Grace Essence, I'm seeing you for the first time. Jennifer Cornell. Who else? Tim, you've always been here. Jack, you just joined us again. I know most of you guys here. Lord Forex, you've always been here. Maldi, you've always been there. Fudogal, you're joining us for today for the first time. So, thank you guys for joining us for today's live session. What I'm going to say is, please, this is the fourth session that we've had so far this month. The session 1, session 2, session 3. Please go back if you're starting with us new, even if you've been here. Go back and understand what we've done so far, so that you can. We are building the foundation for some other things to come in. We are coming to some strategy. We're building a very good foundation for you to come in. So go back and listen to those classes again and again. If you can listen to this twice, just about 1 hour. Take your time. If something that is you want to make money, it needs your time, and play those videos. Watch. I tell people those videos are not being monetized. We don't even have the number to monetize this. It's for your benefits to record, so that, because we may not always have this time to teach you live like this. So you just refer you go answer. If there's a question, you go and watch the video, or we make something recordings for you. So please, for Christ's sake and for your benefits, you go back to those videos. There's going to be updates drop on the group. Then another important thing is that we are a growing community, and we really appreciate your support. So please, 1 minute, guys. All right, guys, sorry about that. So I was saying the community is a growing community, and we really, really appreciate your support. So what you can do for us is to share our content, our flyer, maybe on your socials, and comment and share. Give us a review on Facebook. So specifically, after this class, we're going to drop a link of our Facebook campaign where you can write us your review about today's class. We really appreciate, because that's going to help us to reach a higher number of persons and to show that we are doing something very important here. As you can see, nobody has been charged for this class. We're not paying money for this time. We just want to do this to, educate as many as people we can, to be able to come on board and learn this skill, and eventually turn it into something that could bring them money if they are stay committed. So guys, I'm begging you today. The last week, we asked for this support last week, and I think we didn't have a number. That's why this week we may not have somebody to get a reward. Usually, we even gift people. At the end of the day, we gift rewards to just show appreciation that we love you and we are here full time for you. So, but this week, I'm not sure there's any reasonable, if not reasonable, but there's not really that's review taking effect. We've checked. I'm not seeing any new one that requested from you guys. So please, after now, just there's gonna be a link on Facebook. Just follow the link. Write on the comment sections what you think about the community, if it's helping you or not. What you think about today's class. That's gonna be a long way for us. And the end of the day, by next week, we'll pick 1 or 2, 3 persons. You could increase the number and even more to show appreciation, show a reward from the community. So stay tuned on the community. Updates are coming. Tuesday, last week, we did not have our live trading sessions where we do analysis together. But that session, which is on Tuesday, and we will drop more focus signals and probably create some content for you guys for the week. So I would like to take questions. If anybody has a question, we have eaten up our time. So ask question. Then the next 5 minutes or so, we are out from here. Go ahead, guys. Lord Forex, I think I just unmuted you. So I'm going to unmute you guys so that you can ask questions if you're there. Ask questions where you have one after the other, please. So let's go, guys.
Yes, sir. Thank
All
you
right.
so much for having us today, sir.
Hello.
All right. That's very fine. Thank you, Mandy. You're welcome. Lord Forex.
Yes,
Yeah,
sir.
Yes.
boss, and
Sir?
I destroy like I had issues on my Telegram, but I'm back now, so I just need you to approve me on the group, and then just update us more, and then the videos you're talking about, I will need them.
Okay. That's very fine. We'll do that. Send your request to the group. Then
That's
that
it.
will be approved, and then we will drop the links for the content we've created so far.
Okay, okay, good.
All right.
So anything you just update us, so we'll not be lacking behind.
Sure. Sure. Yes. I think I have one more announcement. Before any other question, please. If you've been here in this community for more than 1 month, you're supposed to be trading live account by now. Like, even if it's small. I mean, in fact, by next week, I'm going to talk to my team and see how to support at least 2 or 3 new traders that are willing to, provide themselves deposits. So we could do like something like a cashback on their deposit for them. So if you deposit like maybe $20, this is going to be specific for some specific persons actually. Maybe like a $20, we could do you $5 to $10 cashback bonus. We'll select 1 or 2 persons and give that as a giveaway. So what that means that you can either add that money on top of your account to be like $30, or you can use that money and pocket, and use that as a 50% cashback for your deposit. So, but we will come out with something to support some persons that are here that are very willing to take risk. So let them see how this thing works. But we'll start small because, as we grow, yeah, we can do more. So we'll start small to see how to give back. But if you're here, you need to make sure that after this class, if you don't have a trading account, there's going to be a link drop. Go and register your trading accounts. Verify your account. That is when you're starting being serious.
Yeah, after this call, you drop them back.
Verify your account. Why I'm saying you should pursue your verification. Why I'm saying that you should verify your account is that in some cases, if you don't have your credentials complete, like maybe you don't have, they request a bank statement to verify your proof of address or request your ID card. If you don't have some of these things, at the time you're ready to start trading, you start going to be looking for them. So, but if you can start now to verify your trading accounts, if you have any challenges, you'll be able to sort these documents out, because basically it's going to be your documents to verify your account, and then you are good. So, guys, please, you do that. So, one more questions, then we'll take the rest of the question on the community. You write us on the community. We'll take your questions. One more question, guys.
Yes, sir.
After
Thank you
your
so much for having us, sir.
All right. Thank you for joining us too.
Sir, I'm talking regarding the Facebook page that you talk about.
Okay, go ahead.
Yeah, when you drop the link on the community channel, once you click on the link, it will just take you direct to the old post that you posted, where you can no longer.
Yeah, it's taking us. You're gonna take. We are promoting that particular content. So, if you
Yes, sir.
we need the engagement there. So, whether it's the old post, a new post, it means that it's the same. It's that post that we want you guys to engage on. So you can, even if you drop previous comments last week, you're very, very free to do your comment this week, or drop your review this week. If you drop a good one, you still be maybe selected for maybe a reward next week. So it's still valid for us.
Okay, sir.
All right. Thank you very much.
All right. Greg,
Yes.
can you
drop
hear?
the
Can
link,
you hear me?
Yeah, I can hear
drop the
you.
link
Okay, I will
follow
drop it.
immediately.
Okay. Can I speak?
Yeah, you can speak now. Thank you.
All right. So please, I need you to throw more light on the buy stop and buy limit, please. I have some lingering questions around there. I don't need to
Okay,
confirm.
can you ask those questions specifically?
No, I just need to understand their differences here.
Okay. For buy stop, sell limits, buy limits are into pending orders. basically. So what that means is that these are orders that are not being executed immediately, but you need a price level for your broker to execute this order as it's pending before you use it. So in the case of a stop order, basically, the stop order, you want to trade in the direction of the market, whether you sell stop or buy stop. So you want to enter into the direction of the market. That means you're waiting at a certain price, and then you expect price to trade that area, and then you want to join in that trend of that market. So buy stop, sell stop are used in a continuation of the direction of the market, while sell limit, buy limit are used in reversal of the markets. You're expecting price to reverse when you trade that particular area or price that is going to reverse. So that's when you use sell limit, buy limit.
Exactly. Thank you. That's just what I wanted to know.
All right, that's okay.
Yes, sir.
So
Yeah. Sir, can I speak?
yeah, speak.
For some signals that you normally use to drop, or some snapshots after the trading, I used to find out that most of the trade, you'll see that sometimes it will be more than 10, sometimes 5.
Okay, let me explain that. Yeah.
Okay.
So I trade more than one account. Okay. And so I manage more than one portfolio. That's simply what it means. So I choose my risks, so I can decide to average my trade. But I don't advise any of you guys to do that. The best thing I can do for you guys is first and second entry. If you notice, go to our trading history, you will see that we have first, second entry. At best, we have first entry, second entry when we have second entry opportunity. So in that case, those are the trades that are very, very manageable and valuable. The rest of the trade are basically the ones I scalp on maybe lower time frame, higher time frame during the intraday, while we wait for the main trades to perform. So that's why you see most of my trade might carry multiple entries and different time zones and all of that. Different entry and closing price and different opening and closing price. So that's what you should understand. But the signal that we provide, we have account that we trade the same signal, the same. When it's not hitting stop loss, it's not hitting, we are just positioned on that same account. So follow the one that you see us drop as signals. Yeah.
Thank you so much, sir.
All right, I appreciate that. So guys,
thank you, boss.
All right, we'll talk. We may have a community virtual meetup so that we can do these discussions that we're having right here. So let's not take any of our time anymore for those that have something else to go do. We'll have this class next week again by Sunday. And before that, stay active on the community. There'll be updates. There'll be several things to get done. Let's go make some money this week. Okay. So I'd like to say good night from here. Thank you very much, everyone. Oh, Coach Victor, I'm just saying that you're lifting up your hands, but we're already closing. So write us on the group. We'll talk to you over there. Thank you, guys. Thank you, my boss, CEO. You're here as well. Thank you for staying with us this evening. Good night, everyone.